In today's episode, we are covering 5 stocks that could make you rich. These are stocks that I have personal positions in. I will share with you how much I own in each stock, why I'm bullish on them, and if I'm buying more at these current levels. A lot of them over the past 2 weeks have come down a little bit. So I think the opportunity now looks even better than it did before. Now, if you think the AI bubble popped or something like that, then disregard this video. But let me tell you now, the AI bubble hasn't even started yet, let alone popped. So I think there are some massive opportunities within these companies, and these are the stocks that I am actively adding positions to. If that sounds like something you're interested in, if you like to make money, hit the like button, subscribe to the channel, and check that link out down below in the description of this video. If you want to come invest alongside us, get involved with the trading community. But more on that in just a few moments. Let's get into stock number 1. Okay, so we're probably going to cover this stock the least out of all of these names. This company is USA Rare Earths. Its ticker is USAR. I have 400 shares in this stock in this company. It's worth $12,812 as of today, the entire position. Now, this one's interesting. It's rare earths in America. Now, whether or not the US and China get along from a trade perspective, there is going to be this focus on bringing rare earths domestically into production. Now, this company is not currently producing any raw materials, but production is starting soon in Texas, and the growth is expected to ramp dramatically. Now, the stock was up a fair bit today. The stock was up 14% today. It's currently at $31.71. It came down quite a bit from the all-time high of $44 per share on October 13th. So it kind of got dinged right alongside these other AI stocks that we're going to talk about. But I think this is a theme that's not going away anytime soon. Now, this company is about a $3.3 billion market cap. And one of the big catalysts today that caused the stock to jump was a new buy rating and outperform rating put on the stock by William Blair analyst Neil Dingman today. Now, the CEO of this company also went on CNBC, was talking about their push into rare earths and magnets and how they want to be a leader in that, or at least very much compete in that market in the U.S. over time. Now, the CEO was also asked on CNBC this morning if they had been in contact with the U.S. government for the government to take a stake in the company, and she said, I can't comment on that. So that's part of the big catalyst for this company. Is it seems like inevitably the U.S. government is going to take a stake. Now, about a month ago, it was reported that the U.S. government was in talks with the company, or at least reached out to the company to take a stake in the company. Now, here we have it. Average estimates for revenue for 2026 is $46.3 million. And then December 2027 is $183 million. So you're expecting explosive growth after 2026. Like 2026 is breaking ground, getting initial production going. But after that, the CAGR is expected to exceed 60%. 2026 and onward. So you're expecting some pretty rapid growth over the next 5-10 years. And again, one of the near-term catalysts for this company is a potential stake by the U.S. government. Just like MP Materials, that would cause significant upside from current levels, in my opinion. And I really think this is one of those companies that is just like, the hype is warranted, right? All of these material companies, they're high, right? There's a lot of hype in them. But I think it's really warranted with the AI arms race we have with China. Like, that is not going away anytime soon, and rare earths are going to be in focus. And even the raw rare earth materials themselves probably go up in value from here. So, I do like this company. And again, it says here long-term revenue growth is forecasted at 63.4% annually beyond 2027, outpacing the broader material sector due to rising demand for rare earths and EVs and renewables. So again, this is one of those sectors that is not going away anytime soon. The company is only a $3.3 billion market cap that is going to see explosive growth in the future. That is something I want to have some exposure to. So if you don't have a lot of exposure to rare earths, this could be a good one for your portfolio. Now, the stock number 2 on this list is Poet. Now, Poet Technologies has come down from its recent high at $9.41 down to a recent low of about $6.98. It's up today about 10% at $7.71 per share. Now, this company's interesting. It's pre-revenue, technically, market cap of $636 million. Now, they design and develop company-specialized optical electric solutions for high-speed data communication. The company focuses on chip-scale photonics using its proprietary optical imposer platform, which integrates electronics and optics into a single chip to enable efficient, scalable optical links. This technology powers applications in AI networks, data centers, telecommunications, and hyperscale computing, offering products like high-speed optical engines, the 800G and 1.6T variants, light sources, and custom photonic modules. These solutions aim to reduce power consumption, latency, and cost compared to traditional discrete component optics, positioning Poet as a key enabler for next-generation AI infrastructure. The company is ramping up manufacturing through partnerships in Malaysia and has shipped initial sample orders to customers. Some estimates have the company doing anywhere from 10 to 800 million in revenue next year. So the company is basically about to start mass manufacturing their product for companies. But the estimates are, who knows, all over the place. The company is going to have earnings between November 11th and November 13th. Okay, a day in between there. They have not confirmed earnings thus far, that I know of at least. And that's when we're expecting to hear a lot more about 2026, about scalability, about what revenue could look like, potential partnerships. Now, the company has a order backlog that is modest but growing, centered on initial product and sample shipments. A September 2025 production order exceeding $500,000 for optical engines, with shipments starting in early 2026 and potential to scale to high volumes. Volume production orders are anticipated in the second half of 2025, supporting manufacturing capability of up to 1 million units annually once factories are fully operational. The company has zero debt and $150 million in cash. There was just recently a $75 million investment from an institutional investor, which, again, for a pre-revenue company, for an institutional investor to invest $75 million into a company like this, you would make an argument, logically, that there's probably big news coming soon. There's probably a partnership coming soon. There's probably, mass production coming soon. I would imagine earnings are really the big catalyst for this stock. I mean, all it's really going to take is one big partnership, one big confirming order, and the stock's going to take off. This kind of reminds me of Novartis Semiconductors. I bought NVTS at $3 a share because basically they were one partnership away from going parabolic. The stock today, NVTS, is at $17 a share. I bought this thing at $2 a share. Okay? So, again, maybe it was in the dollar range. I kind of was buying it all through here. You get the idea. This company, Poet, reminds me of NVTS. You're just one partnership away from the stock going parabolic. And the stock has come down from its all-time high till today at about 18%. So you're getting a little bit of a discount, and I shouldn't say that's at an all-time high. The stock's all-time high was technically about $26 a share. So yeah, there's some significant room for upside in this one, and I think we're very early for a company that has been pre-revenue for a long time that is about to start real growth. So in this, I have 1,700 shares. This is something I want to add to in the next coming days, worth $13,260 as of now. I should mention the partnerships this company already has. Sivers Semiconductors. This is a strategic collaboration to co-develop external light source modules tailored for AI infrastructure. Okay, Semtech Corporation. Partners to integrate POET's 1.6T optical engines with Semtech's signal conditioning ICs, creating advanced optical receivers for AI and cloud networks. NTT Innovative Devices, joint development of next-generation connectivity solutions for AI mobile networking. Foxconn Interconnect Technology, a strategic alliance for manufacturing and supply chain integration of POET's optical modules, utilizing Foxconn's global assembly capabilities to scale production of 800G/1.6T engines. So, again, they already have some partnerships, some exciting things going on, but you're really one big partnership away from this thing going to like $50 a share, right? It's a small company. You're literally one partnership away from this thing exploding, in my opinion. Again, I'm not a financial advisor. I'm not a financial planner. That's how I'm thinking about this stock. Okay, now stock number 3 is Path. Okay, ticker symbol PATH. This is UiPath. This is a stock that most of us are familiar with. It IPO'd in 2021. It hit an all-time high of $90. The stock is currently at $15.90 per share. You have about a $9 billion market cap on the company. It's a little bit less than that after the recent selling. The company is at 1.7 billion ARR currently. It trades at about 5.3x sales, so it's not expensive at all. This is really a turnaround story. Now, recently the stock rallied from about, again, like $10 per share up to $18, $19 per share because they announced partnerships with OpenAI, NVIDIA, and Snowflake to broaden use cases and attract customers. This gives them big time exposure. This gives the company like clout, if you will, right? They have these partnerships that in and of itself is going to drive them business. Now, other things I like about this company is they are currently profitable, that they are a well-established company, and the founder is still with the company, and he serves as the chief science officer. So this is one of those companies where, on a risk basis, this is the least risky of any of the companies we're going to talk about because it's well-established, because it's profitable. This is one where I could see the stock getting back to its prior highs on, relatively short order. Now, it's not going to happen overnight. The stock's not going to go from 15 to 90 again. But I do think over the next 12 months or so, with execution with this company, as growth returns back into the company, as I think it will, you could be looking at significant upside from here. Again, just to get back to $90 a share, based on where the stock is today, you're looking at like 560+% growth from here. You're looking at over a 5.5x. I think that could reasonably happen with these new partnerships and with this new attention on the company. So I do like UiPath. My position is 1,200 shares. Net value $19,800. So on the larger side. Now, the fourth stock on this list is one we've talked about quite a bit on this channel. It is CCCX. It is a SPAC merging into a company called Inflection. Now, this company is doing about $50 million in revenue this year, okay, versus something like Rigetti that trades at a massive premium to CCCX or Inflection. The stock is just simply undervalued relative to other quantum stocks. That's the whole case for this company. Now, I make other arguments like they have extremely skilled management. They've only raised $270 million in capital since 2007. That really just shows good capital allocation. There's a lot of companies that are burning through that much money per year, and this company has been able to survive and really thrive with $270 million since 2007. Shows exceptional leadership. Okay, they are getting $580 million in net proceeds from this this SPAC merger process. Now, again, I don't know if Quantum is just overvalued to begin with, but assuming Quantum is not overvalued to begin with, CCCX is a huge winner in this space, or like literally from a company to company perspective, this is the best quantum company that you can buy. And it's trading at a lower valuation by a lot versus Rigetti. So again, it's a SPAC. SPACs are backed at $10 a share. Wall Street is saying with the stock at $20 a share that they're confident the merger is going to go through. But I don't expect this stock to explode to the upside until we get closer to the actual merger, which is going to be in the next 3 to 5 months. We don't know the exact, closing date. And then after the merger closes is when you could really see the stock take off and start to reflect similar valuations versus other quantum companies. Now, this company is more diversified as well. They are selling, sensing products and atomic clocks and working on supercomputers. They're doing a bunch of different things in the quantum field, not just one specific thing. And again, they're already driving $50 million in revenue over the next 12 months, and they have $300 million worth of a backlog. So yeah, this is a hot company right now. I do have 1,000 shares in CCCX with a market value of around $20,470 as of today. Okay, so it's one of those. I didn't have exposure to quantum. I sold all my quantum stocks way too early. Okay, I had IONQ at $7 a share. Okay, sold out too early. So this, I think, is the best way to play quantum if you are bullish on quantum. And number one, by far my biggest single stock position is Rezolve AI. Now, Rezolve AI is the most undervalued AI stock on the markets by far. There is nothing that compares to Rezolve AI's valuation. Okay, from a valuation perspective, this stock is dirt cheap. It's trading at less than 3 times sales. Okay, the market cap is around 1.37 billion. They have 150 million in ARR for 2025 and guidance for 500 million in ARR by 2026. Okay, so it trades at less than 3 times sales in a hyper growth, low competition, large total addressable market. Okay, that's huge. Now, insiders own about 38% of shares. Citadel bought 100 million worth of shares, about 5% of the company, at $6.67 per share. I look at that as value confirmation. I look at that as Citadel, they're a large firm, they're a well-connected company, and they see the value in Rezolve, again, at $6.67. This stock is at $4.88. It is a steal of a deal at current levels. Now, the company has endeavors to get into crypto to basically make seamless transactions possible with crypto using like cards and instant settlements for both you, the purchaser, and for the business itself. That's more of a long-term aspiration, but the company is currently using agentic AI in commerce. Okay, so like super salesman chatbots with their checkout features and all of that. Now, the company is projecting profitability by late 2026/2027. The founder is still with the company, which is Dan Wagner. And again, this is just one of those companies you don't come across all too often that is growing at hyper speeds, that is not receiving the market valuation they should be. That's it. That's the bottom line. This stock is significantly undervalued for the growth prospects and the numbers that they are putting up. Now, my position here is 31,800 shares with a net value of $155,000. Okay, the stock in an all-time high, or recent high of about $8.45 or so, and I do think Rezolve's moment will be coming again. I think anyone with 2 brain cells can see the opportunity in Rezolve, just even based on a valuation kind of basis. This company is priced to absolutely miss their numbers. So, you're really like one big contract away from this stock going up a couple dollars a share. Recent price targets on Rezolve are there was a price target for $15. There's another price target for $12.50. A lot of price targets are around the $10 or $7 level. The stock has an average price target on Wall Street of $9 a share. That's basically a double from here, let alone some of the higher price targets. Wall Street is just missing the boat on this one. And that's why I have so much in this company. We are sitting on some gains. I was buying this stock around $3 per share in the $2 range, so we were really early to this one. But I think the best days for Rezolve are ahead of it. So let me know your thoughts on all of these stocks down below in the comments section. Which ones are you excited about? Are you buying any of them? Are you already an owner in some of them? Let me know how you are allocating your capital in some of these stocks, or if there's other stocks that you like more, point me in the right direction. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode if you want to come join the trading community where we are doing work like this on so many stocks right now. The opportunities are almost endless. Like, it's crazy. Almost every day we're coming across a new stock that is compelling buy. So come check it out. Link down below if you would like to. Have a great rest of your day, and I will see you in the next one.